हाय एवरीवन। सीए फाइनल मई 2026 का एफएम पेपर का एमसीक्यू और डिस्क्रिप्टिव सॉल्यूशन एग्जाम हॉल में तो मेरे से सॉल्व नहीं हो रहा था। कुछ लिख भी नहीं पाया तो कॉन्फिडेंस बहुत लो हो गया। सो आई थॉट ऑफ सॉल्विंग घर आके यूजिंग इंटरनेट एंड बुक एज a reference. So I solved the paper and I'm sharing this solution. इसमें मतलब if there are any mistakes तो आप लोग कमेंट में बता सकते हो मुझे। So first question, 5,000 rupees per gram पे we have purchased 5 years of sovereign gold bond and 200 gram we have purchased and interest rate is 2.5% per annum and capital gain tax is 20%, inflation rate is 4%. So first question is asking is 6,800 rupees per gram पे you've redeemed the SGB bonds, capital gains tax 20%. What is the net amount received? So सेल प्राइस 6,800 है, इश्यू प्राइस 5,000 है, इन्फ्लेशन 4% पर एनम है। सो इंडेक्स कॉस्ट ऑफ एक्विजिशन हमें निकालना है। To calculate index cost of acquisition, we'll multiply 5,000 with 5 years of inflation index. So 5,000 into 1.04 तो पहला साल का आएगा, ऐसे into 1.04 करेंगे तो सेकेंड साल कंपाउंड होता जाएगा। So index cost of acquisition होगा 6,083.26. Capital gain tax is 20%. So टैक्स अमाउंट कितना आएगा 6,800 माइनस इंडेक्स कॉस्ट ऑफ एक्विजिशन इंटू 200 ग्राम खरीदे और कैपिटल गेन टैक्स इज 20%। सो टोटल टैक्स अमाउंट आएगा 28,669 रुपीज। और रिडेम्पशन पे वी आर गेटिंग 6,800 रुपीज इंटू 200 ग्राम्स, सो 13,60,000 हमको रिडेम्पशन पे आएगा। उसमें we'll deduct the capital gain tax to get the net amount which we'll receive. So 13,60,000 minus capital gains tax is equals to 13,31,331. ये first question option is C. So second question, price becomes 6,800 per gram. Inflation rate is 4%. What is the index cost of acquisition and taxable capital gains? So index cost of acquisition uh, and taxable capital gains. Second question. So 5,000 rupees into 1.04 to the power 5 और 200 ग्राम खरीदे तो 12,16,653 इज आर इंडेक्स कॉस्ट ऑफ एक्विजिशन। टैक्सेबल कैपिटल गेन होगा, ये हमारा सेल वैल्यू 6,800, उससे मतलब इंडेक्स कॉस्ट ऑफ एक्विजिशन माइनस करेंगे और 200 grams है, so we'll multiply with 200 grams. So this will be our taxable amount of capital gains which we have earned. So second option is going to be D. D. Next, third question, they've asked JK purchases 200 gram at 5,000 rupees per gram. The investor falls in 30% tax bracket. Inflation rate is 4% per annum. They're asking us what is the post-tax annual interest income and appropriate real post-tax return. So the interest income will be 5,000, matlab 5,000 gram, 5,000 rupees per gram into 200 grams into interest rate is 2.5% per annum. So total interest income which we will get is to 25,000 and tax rate is 30%. So post-tax interest will be 25,000 minus 30%, which is 17,500 rupees. Or what is the return? So interest income divided by investment value. Investment value is 200 grams purchased at 5,000 rupees. So 17,500 by investment value करेंगे तो we'll get a return of 1.75%. But they are asking this is nominal rate of return, like uh, including the inflation factor. So they are asking the real rate of return, which is excluding the inflation thing. So nominal return 1.75 minus 4% inflation, we will get a negative 2.25% return. So option is A, 17,500 and minus 2.25 percentage. Coming to case scenario 2, So total cost of installing solar plant is 3.2 crore. Based on current tariffs 25 lakh per ईयर का सेविंग होगा इन परपेचुइटी. हाउएवर एक साल में टैरिफ रिवाइज होंगे और सेविंग could decrease to 15 lakh per year और सेविंग could increase to 40 lakh per year. सेविंग 15 lakh per year हो सकती है, 40 lakh per year दोनों हो सकते हैं. में वेटेड एवरेज कॉस्ट ऑफ कैपिटल दिया हुआ है और रिस्क फ्री रेट दिया हुआ है. सो फोर्थ क्वेश्चन एंड फिफ्थ क्वेश्चन we solve it together. So first fifth question solve करेंगे. So 3.2 crore प्लांट लगा रहे हैं and 1 year saving will be 40 lakhs and 50 lakhs perpetuity. इन दोनों में से कोई होगा. रिस्क फ्री रेट है 6.5%. Using risk neutral valuation compute the returns in both scenarios and probability पूछ रहा है. So 40 lakhs perpetuity और 15 lakhs perpetuity saving होगा. इसको कैपिटलाइज करेंगे. हाई में 40 lakhs पर एनम होगा. So if we capitalize it with weighted average cost of capital, we'll get value of 421.05 crores. Or low में it will be 15 lakhs per annum. And if we capitalize it with 9.5%, which is the weighted average cost of capital, we'll get 157.89 lakhs of value after year one. So what will be the return? For high car return 421.05 minus 320, which is the initial investment given in the question, 3.20 crores or 320 lakhs, divided by 320. So 31.56% is our return. Our low, we are going to get 157.89, but investment is 320. So we are going to get negative return of 50.63%. So to calculate the percentage probability of high saving scenario का probability calculate करने के लिए we'll multiply, like we'll use the risk neutral formula of real option में जैसा होता है, like risk free rate of return is equals to probability into stock up plus 1 minus p into probability of stock down. फॉर्मूला यूज करेंगे. तो इंटरेस्ट रेट 6.5%, रियल ऑप्शन जो है उसका फॉर्मूला के अकॉर्डिंग. सो पी इंटू अप का 31.56%, डाउन का -50.60%. इफ वी सॉल्व दिस विल गेट अ प्रोबेबिलिटी ऑफ 69.5%. सो फिफ्थ आंसर इज गोइंग टू बी बी, हाई ऑफ 31.56, लो -50.63, प्रोबेबिलिटी 69.5%. नेक्स्ट फोर्थ क्वेश्चन. Fourth question में they are asking us a present value of option using discounted rate, risk-free rate and weighted average. So present value of option पूछ रहे. So fourth question हमारा expected value होगा, like probability we have already calculated. Yeah. So expected value होगा 340.79 lakh और इसको प्रेजेंट वैल्यू करेंगे यूजिंग रिस्क फ्री रेट. इफ वी यूज do it using risk free rate, we'll get it as 19.53 lakhs. That is 340.79 minus जो initial investment है 320 lakhs divided by risk free rate. So 19.53 lakhs होगा हमारा present value using risk free rate. Same present value using weighted average cost of capital करेंगे 340.79 minus initial investment of 320 divided by weighted average cost of capital करेंगे. So it will be 18.98%. और ये 340 lakhs 340.79 कैसा है? Probability of up is 69.5% into what is the capitalized value of going up for 21.05 plus probability of down is 30.5% into 6. Probability of going down is 30.5% into the capitalized value of like going down, that is 157.89 lakhs. So expected value will get us 340.79 lakhs. So इसको present value करेंगे using risk free rate and weighted average cost of capital. The option is going to be D. Next, sixth question. 3.2 lakhs will be invested today. Annual electric savings will be 25 lakhs in perpetuity, and after 1 year, savings may change to 40 lakhs or 15 lakhs. Calculate NPV if invested today and after 1 year. If invested today and after 1 year, NPV calculate करना है. So 25 lakhs, if we invest today, we'll get 25 lakhs per year in perpetuity. So if we capitalize it with 9.5%, we'll get it as 2.6316 crore. And NPV होगा minus 0.5684 crore as this minus initial investment. After 1 year, if we like go for the plan, then we can get 40 lakhs per year in perpetuity. So question में दिया है like 40 lakhs or 15 lakhs low scenario. So high scenario का होगा 40 lakhs divided by 9.5% weighted average cost of capital. So 4.2105 crore minus जो initial investment 3.2 crore होगा. NPV is 1.01 crore for high scenario. For low scenario, we'll capitalize 15 lakhs with 9.5%. We'll get 1.5789 crore. और ये इसको will reduce the initial investment and we'll get the NPV of minus 1.6211 crore. So option is going to be C for sixth question. Uh, for case scenario 3, initial investment is like 25 lakhs, 60 is to 40 in ratio in alpha and beta. Standard deviation of alpha is 1.2% and standard deviation of beta is 0.9%. Correlation between alpha and beta 0.6. Of question 7, they are asking correlation between stock alpha and stock beta increases from 0.6 to 0.8. What will be the impact on portfolio's VAR? So a correlation they have given because they want us to find the portfolio standard deviation और portfolio standard deviation calculate करके portfolio का VAR निकाल के स्टेज अगर 0.6 होगा तो पोर्टफोलियो स्टैंडर्ड डिविएशन क्या होगा 0.8 कोरिलेशन होगा तो पोर्टफोलियो स्टैंडर्ड डिविएशन क्या होगा और उन दोनों का डिफरेंस दे आर आस्किंग सो फर्स्ट लेट्स सॉल्व हाँ 11th क्वेश्चन तो पोर्टफोलियो स्टैंडर्ड डिविएशन है 0.60 कोरिलेशन portfolio standard deviation using Markovitch theory का formula weight square x into st square x plus weight square y into st square plus 2 weight x weight y into correlation into stx st y. If we solve this, we'll get portfolio SD at 0.9787 and 0.80 correlation पे again we'll take 0.80 correlation and calculate the portfolio SD. So this time same weight square x into SD square x plus weight square y into SD square y plus 2 into weight x weight y into correlation into SD x SD y. So we'll get 1.0308 as standard deviation of portfolio अगर correlation 0.80 होगा तो so we'll calculate var at 0.6% correlation होगा तो portfolio क्या what is the var so 25 lakhs investment standard deviation of portfolio at 0.6 correlation इतना होगा into z score into 252 days है तो the formula is under root the number of days so root 252 so we'll get a var of 9,05,164 and same for 0.8% correlation 25 lakh will invest and this is standard deviation of the portfolio and z score into root of number of days 252 days so we'll get a var of 9,53,168 the difference in दोनों का 6 पे 9,05,164 और 8 पे कोरिलेशन पे 9,53,168 इन दोनों का डिफरेंस 48,085 so var will decrease by 48,085 and also इसमें ninth question is they are asking what is the var at 99% confidence So already we have calculated this at 0.6% correlation. Uh, the VAR of 99% confidence we have already calculated either 25 lakh into a standard deviation of portfolio into Z score into number of days. So this is 9 lakh 5,164. Ninth question. 9 lakh 5,000 like difference approximation difference 9 lakh 5,271. Next eighth question. Eighth question they're asking approximate diversification benefit per day. So diversification benefit ये क्वेश्चन है हमारा बुक में ऐसा कुछ कॉन्सेप्ट नहीं है. So diversification benefit calculate करने के लिए we'll multiply the investment amount with the percentage of investment in each stock और कुछ individual investment value का we'll calculate the VAR. उसके बाद टोटल पोर्टफोलियो का विल कैलकुलेट द वार एंड डिफरेंस बिटवीन द इंडिविजुअल इन्वेस्टमेंट्स एंड पोर्टफोलियो विल बी डाइवर्सिफिकेशन बेनिफिट. So 25 lakh we are investing in alpha and alpha का में 25 lakh into 60% we are investing in alpha and SD% is 1.2% और Z score होगा 1.28 पर 90% confidence Z score is 1.28. So 60% अल्फा में इन्वेस्ट करने के लिए और वैल्यू एट रिस्क विल बी 23,040. सेम बीटा में 40% इन्वेस्ट करने के लिए और वैल्यू एट रिस्क विल बी 11,520. So individually if we add this both value at risk we'll get 35,560. So that is 23,040 plus 11,520. अगर हम पोर्टफोलियो का if we calculate like portfolio as a whole using the ST of portfolio into Z score, we'll get value at risk of 31,318. So diversification benefit will be जो इंडिविजुअल 60% ऑफ अल्फा और 40% का बीटा का कैलकुलेट करे एंड वी एडेड इट अप एंड पोर्टफोलियो एचडी से जो कैलकुलेट किए वार उन दोनों का डिफरेंस विल बी आर डाइवर्सिफिकेशन बेनिफिट which is 3 to 42 rupees. Coming to case scenario 4, ये क्वेश्चन में they're asking relating to forward contracts. First, क्वेश्चन में ये दिया हुआ कि you have entered a 3 months forward contract to buy USD to 2 lakh. So this is a forward buy contract. Importer is doing a forward buy contract so that he could pay the dollars. So Green Argo Exports cancels the import and closes the 2 lakh USD contract. What is the mark to market gain loss on the following dates? First pay if he cancels, what will be the gain or loss? So usually bid ask में we will buy at the ask price and sell at the bid price. So we are having a buy position in futures market for 2 lakh dollars. To cancel it out, we have to sell the futures. So Feb 1 पे already 1 month has expired of the forward contract. So it will just be 2 months remaining. So February, so, so 3 months का contract on Jan 1st will expire on April. So April का buy cancel करने के लिए we need to February 1st पे we need to sell 2 months forward. So 2 months forward का February 1st पे rate is 83.95. So 83 हमारा gain होगा we buy forward at 84 और February 1st पे we'll sell 2 months forward so we can clear our exposure at 83.95. We'll get a loss of 0.05 per dollar and total 2 lakh dollar पे we'll face 10,000 of loss. If we close it on March 1st, then on March 1st till April, it's only 1 month more. So we will close it with 1 month sale price, that is bid price, that is 83.70. So we sell at 83.70, and our buy price, forward buy price is at 84. So we'll get $0.3 loss. So it will be 60,000 loss. On April 1st, if you want to cancel the 3 month forward, so the expiry, like, forward contract date is April. So to clear a 3 months forward by expiring on April 1st, we need to spot sell. Spot sell करेंगे तो we can cancel our position. So 0.2 profit होगा $2 lakh पे. So 40,000 gain will have. So option is going to be B. 10,000 loss, 60,000 loss, 40,000 gain. 11th question is loss on forward. 11th question. If importer obligation is settled on March 1st, what will be the total cash outflow? If early settle करेंगे तो what will be the total cash outflow? So on March 1st, if we settle our forward, like, uh, yeah, हमारा forward loss will be 60,000. On March 1st, we'll do a 1 month forward sell and to clear this existing contract, and we'll have a loss of 60,000 rupees on the forward contract. And we'll do a spot buy, like import का payment करने के लिए we'll do a spot buy at 83.75. So the outflow is going to be 16,750,000 plus हमारा जो लॉस हुआ है फॉरवर्ड कॉन्ट्रैक्ट पे. If we add that, we are going to get 16,810,000 as the total outflow. Next, 12th question, they're asking what is the maturity settlement versus net extra cost of closing original and rebooking 1 month forward. So net settlement, if we are buying at 84 as per forward rate into $2 lakh, we are going to get a settlement of 168 uh, 168 lakhs. And हाँ, rebooking 1 month forward से हमारा कितना एक्स्ट्रा कॉस्ट होगा, मतलब if we are rebooking 1 month forward, मतलब if we are closing our exposure on March 1st, if we are closing our exposure on March 1st, our extra cost will be 60,000. 13th question is this is theory question, like ये carve out method होगा. और 14th question, green mail tactics is acquirer offers higher price for its shares than market price. Next, substantial amount of convertible debentures is poison pill. This is all in mergers chapter. The MCQ ka solution is done. Coming to the descriptive part. So descriptive part, first question is, one second. First question is, will initial investment is 4,000 million valors, and after 4 years guaranteed sale value is 8,000 million valors. So annual fee is 80 million valors. Except they have given information. So they're asking is net present value calculate karo and all cash flows should be expressed in Indian rupees. So initial investment we did in the project was 4,000 million valors. So we are investing 4,000 million valors. For साल का will get 8,000 million valors. Sorry, after 4 years we'll get 8,000 million valors. 4 years में operating expenses होंगे 80 million valors per year. और also we have entered into a swap of 4,000 million valors at today's spot rate. मतलब 4 साल के बाद we'll get 4,000 million valors at today's spot rate. और उस swap का charges भी दिया हुआ है. So coming to solution, इनिशियल इन्वेस्टमेंट इज 4,000 मिलियन वैलर्स और हमारा स्पॉट रेट है 50 वैलर्स पर रूपी. सो रूपी का कोड दिया है और वैलर को कन्वर्ट करना है. सो विल डिवाइड इट एंड विल गेट 80 million rupees. So annual maintenance fees So this is our initial investment, 80 million rupees. Next, first to 4 years का annual maintenance fees. Annual maintenance fees is 80 million dollars. So to convert this annual maintenance fees, we'll use first year's forward rate, that is 53. So we'll get 1.509 million rupees. So इसको present value में लाएंगे to year 0, it will be 1.323 rupees. Same for year 2, it will be 80 million dollars converted using second year forward rate to rupees, and is rupees ko will bring it to present value. Same for third year and fourth year. So total present value of maintenance will be 4.08 million, and swap fees will be 0.3% on the principal. So the principal amount that is being swapped is 80 million rupees. So annual fees will be 80 million rupees into 0.3%, which is 0.24 million per annum. So every year it will occur, year 1, year 2, year 3, year 4. So 4 साल का will bring it to present value to year 0. Using the discount rate, we'll get 0.699 million or 0.7 million. So total outflows कितना होगा? Year starting में will outflow 80 million rupees. Next, maintenance पे present value is 4.08. 4 years पे जो incur होगा maintenance, और swap fees is 0.7 million, which we have calculated here. So the total outflows will be 84.78 million. Next, हम will calculate the inflows on this. Calculate the inflows on this. 8,000 million we'll receive at the end of year 4. पर उसमें 4,000 million का we have already entered into swap at the rate 50 rupees. और बाकी 4,000 rupees we'll have to do it at the forward rate as there is no swap. So ये exposure currency risk पे expose होगा. So 4050 पे convert करेंगे और 4063.12 पे convert करेंगे. So we'll get 143.37. एंड इसको प्रेजेंट वैल्यू 0.592 पे करेंगे तो ईयर 0 पे 84.87. सो नेट प्रेजेंट वैल्यू, नेट इनफ्लोज माइनस नेट आउटफ्लोज, इट इज पॉजिटिव, सो वी हैव टू एक्सेप्ट द पॉजिटिव. नेक्स्ट बी क्वेश्चन, दे आर आस्किंग हेड स्कोर मॉडल. हेड स्कोर मॉडल पता नहीं कहाँ से क्वेश्चन. So for H model, the formula is d into 1 plus g by k minus g plus d into transition period into growth of high minus normal growth by ke minus gn. ये formula में we have to substitute. But here they are given uh, 15% growth, and they are also given for current period ROE 20% and retention ratio 25%. We have to ignore this current data because ये करेंगे तो we'll get 25% into 20%, which is 1 second, 20 into 5%. This 5% growth rate doesn't seem like a high growth rate. So current growth rate is 15%, which is the high growth rate. We have to take it as 15%, and terminal value pay the growth rate will be 12% into 50%, which is 6%. So if we substitute all this into formula, so normal ka growth rate will be 6%. So d into 1 plus g by k minus g, or plus d into transition amount into 15% is the high growth ka growth rate, or 6% is normal. So we'll get 734.28, and current price is 850. So current price is like more than the what we are getting with this square model, so it's overvalued. So third question, C question is additional loan of 20 million they want, but they have already have maximum permissible limit of 2.5 is to 1 of debt equity ratio. Growth rate 10% है, but they want to grow at 16% per annum. So current growth rate 10%, aim is 16%. ये 6% grow करने के लिए we can't take more debt because we already have debt equity ratio of 2.5 is to 1. So other option हमारे पास क्या है? We can take equity, or we can increase the profits जो internally, मतलब dividend reduce करके या कुछ करके we have to increase our profits. We can't take debt. Next, second question. Second question, they're asking arbitrage pricing theory के हिसाब से is it correctly priced? So arbitrage pricing theory formula RF plus beta into uh, this one plus beta 2 into what is we call this risk premium of factor 2. So we'll calculate security X, we'll get it as 13.3%. Required rate of return is 13.3%, but actual return is 14%. So the stock is undervalued. For security Y, actual return is 16%, required rate of return is 16.2%, stock is overvalued. So second point, they are saying we have 1 lakh available and long and short portfolio construct करना है जिससे portfolio sensitive are 1.4 with respect to factor 1 and 0.05 for factor 2. So we'll construct equations for this. So we have to invest in A and short B. Desired factor 1 is 1.4, desired factor 2 is 0.05. So factor 1 of A is 1.2, factor 1 of factor 1 of B is 0.8. In दोनों से we'll construct equations. So factor 1 of A into weight of A plus factor 1 of B into weight of B is equals to desired beta into amount. So 1.2A minus 0.8B is equals to 1,40,000. Similarly, factor 2 का equation will construct 0.5 beta of A and 1.4 beta of B. Desired beta 0.05. So we'll get factor 2 का equation. If we solve both the equations, we'll get B का weight 50,000 and A का weight 1,50,000. So we have to long 50,000 of A and short 1,50,000 of A and short 50,000 of B. Coming to B question, investors enters into option. So इसमें in the money, at the money, out of the money क्या है? They are asking. So the price of the share is 2,000. और call option का है. So strike price of 1920. It is less than 2,000 rupees. So it is in the money for the call option. Strike price of 2,000 और share का price भी 2,000 है. 2,000. So it is at the money, like both the strike price and the share price are equal. So it is at the money call option. Here the strike price is 2080 and share का price 200 है. So the strike price is more than the price of the stock, so it is out of the money call option. वैसे ही it's for put also. 1920 is out of the money, 2000 is same, 2000 at the money, and 2080 is in the money. So anything more less than the 2000 will be in the money for call option, and anything more than 2000 will be in the money for put option. And if it is equal to 2000, then it is going to be at the money. So हम लोग प्रीमियम हमको दिए, so we have to calculate intrinsic value. Intrinsic value will be strike price और जो current price है उसका difference. So 2000 minus 1920 is 80 intrinsic value. So next 2000 minus 2000 will be 0. अगर the strike price is more than the price of the stock, that is 2080 पे strike price है, this is out of the money. If the option is out of the money, then our intrinsic value will be 0. So total premium or intrinsic value का difference is going to be our time value. So time value calculate करें इधर. Coming to second point. Next 3 months expiry price में increase by 150 or decrease by 1. So expiry price 2150 होगा या 1850 होगा. If price becomes 2150, then what will be our payout? Option A लेंगे तो 1920 का strike price है और स्टॉक प्राइस इज 2150. सो वील गेट अ पे ऑफ 230 और उसमें से 130 का प्रीमियम माइनस करने का 10,000 का पे ऑफ होगा. ऑप्शन बी 2150 एंड यू गॉट अ स्ट्राइक ऑफ 2,000 रुपीज. सो हमारा नेट पे ऑफ यहाँ पर 6,500 होगा. ऑप्शन सी का भी विल कैलकुलेट द नेट पे ऑफ, इट इज 2,500. विल एक्सरसाइज दिस ऑप्शन बिकॉज एक्सपायरी डे के दिन स्टॉक का प्राइस इज मोर देन द स्ट्राइक प्राइस. So it's like we are 1 second. So we are buying right to buy at 2080 when the stock price is 2150. So we'll exercise the right to buy at to 2080 and our profit will be 70 per contract as we'll get a profit. DEF are going to lapse because the strike prices are 1920, 2000 and 2080, whereas the market price is 2150. So the loss is going to be the premium amount. Similarly, for when the stock is 1850, we are going to lapse our call options. So loss is going to be to the extent of premium. Next option D, E, F are put options. We are going to exercise this put option. So when the uh, price is 1850, we'll exercise our put option of 1920. That is a right to sell at 1920 and buy at 1850. So profit will be 70 and net profit will be 30 into 100 contracts with one. Same will calculate for both E and F. So next C question is true or false. So first one is startups valuation is based on cash flows. No, it is false because they won't have any stable earnings. Startups won't have any stable earnings. Next, venture capital financing is in stages. Yes, we'll have seed funding, stage one, stage two, stage three, as also. And bootstrapping reduces dilution risks, but may limit growth due to capital constraints. Maybe true. Bootstrapping say we'll use only our savings, so our limited capital hoga, so it will lead to capital constraints. Angel investor generally invest at later stage. Yoga false because angel investor usually invest at the earlier stage. Next, next होगा three. Three का A I didn't solve. Next we are coming to 3B. 3B total investment is 12 lakhs. Dividend plan 60% and bonus plan 40% we are investing. So total initial units we have to calculate for dividend plan. So we are investing 7 lakh 20,000 by 48 plus 2% is the entry load. So we are investing 14,705.88 units. We are getting a dividend on this. So 5 rupees per unit, we are getting 73.5. We are reinvesting it at 51. So we are reinvesting and getting these many units. Our total units becomes 16,143.63. On redemption date, the value is 54. So our redemption value will be 8,71,974. But we are going to have an exit load of 1%. So net redemption value will be 8,60,252. Our return will be difference divided by initial investment, which is 19.9. For bonus plan, our initial investment is 4,80,000 and we are investing at same NAV plus entry load. So we are getting 9803.92 units and bonus 1 is to 4. So this many units we are going to get. Total on redemption date 12,054.90 units into 52 is the NAV into 99%, so 1% exit load. We'll calculate the return and the return bonus plan is giving more return. Next C point, transfer of NPA includes balance sheet, comment on but remove regulatory and valuation charges. Yes, NPA's का valuation is very difficult and it involves legal delays and India का regulatory compliance. This is theory question. Next to 4A, we have to, using the given cutoff rate, identify securities to be included in optimal portfolio. So actually, cutoff rate is the minimum risk to reward ratio. So to calculate the optimal portfolio, we need to use the trainer ratio here. So extra return per unit of market return we are going to get. So if we calculate whichever are more than the cutoff rate, which is 7.95%, we are going to invest in those in our optimal portfolio. These both we are getting more than cutoff rate, so we are going to invest in this. Next, they are asking compute the proportionate investment in each security. Calculate the proportionate investment in each security. We are going to use this formula, which is कट ऑफ रेट से ज़्यादा हमारा रिटर्न कितना आ रहा है or this is change in beta for unit of systematic risk. Like systematic risk per unit sensitivity per unit of unsystematic risk. We have to tell this formula से calculate होगा. The formula में if we apply, we are going to get B security का 13.02 and D security का 22.98. So with this, we are going to calculate the weights of B and weights of D, मतलब approximate करके. Next, third question, CAPM compute the expected return in value of each security. This CAPM model पे we have to calculate the return, and if the required rate of return is 14.8% and actual return is 15%, stock is undervalued. Next, required rate of return is 10.8% and actual return is 11%, the stock is undervalued. Next, fourth question, they're asking why is portfolio constructed consistent with CAPM assumption. CAPM assumption के साथ it is consistent because unsystematic risk diversified in larger portfolio and primarily systematic risk के इस वजह से return हिल रहा, unsystematic risk is very low. It's not affecting the stock very much. So CAPM और दोनों का equal, same, almost same आ रहा. Next question, geometric mean पे average return for investor who bought 1,000 shares in closed fund. So closed fund means it is units are traded in exchange. So we have to calculate the market price of the units. So 20 minus 5%, ये 22.5 से minus 5% करेंगे तो market price ऐसा 5 साल का market price will calculate. Then periodic return year 1 का 21.375 minus 20 market price का मतलब return. ये 4 साल का मार्केट प्राइस का रिटर्न विल कैलकुलेट एंड ज्योमेट्रिक मीन मैथमेटिक मीन से डिवाइड करेंगे. ज्योमेट्रिक मीन वी आर गोइंग टू रूट. सो रूट के हिसाब से ज्योमेट्रिक मीन इज गोइंग टू बी 3.77%. सो वील कैलकुलेट द ग्रोथ रेट ऑफ एनएवी. सो ग्रोथ रेट ऑफ एनएवी, एनएवी का फोर्थ ईयर का 22.3, फर्स्ट ईयर का 20, तो 22.3 डिवाइड बाई 20 रूट 4 बार करेंगे तो माइनस 2.76% विल बी द आंसर. नेक्स्ट 5A, net income is 180 crores. Share price दिया हुआ है. You are required to perform two-stage free cash flow per equity valuation. So पहले हम cost of equity calculate करेंगे. So risk-free rate is 6%. RM minus RF into beta, we are going to get cost of equity of 12%. Next, calculate total present value of free cash flows for high growth period. High growth period पे they have given that net income is 180 and it is going to grow by 25% annually. And हमारा capital expenditure net of depreciation और increase in working capital for year 1 year 2 दोनों भी है और debt 30% भी है. So free cash flow for equity होगा फर्स्ट ईयर का 180 लाख इंटू 1.25 करेंगे और 30% डेट का है. सो हमारा कॉस्ट कैपिटल एक्सपेंडिचर नेट ऑफ depreciation or working capital is going to be only to the extent of 70%. हम उतना expense करेंगे, 30% will be of debt. So free cash flow per equity of year 1 is 57. उसको present value करेंगे तो 50.90. year 2 so year 1 का 225 into 1.25% growth करेंगे और minus 280 into 70%. That is 70% of the capital expenditure net of depreciation is going to be attributable to equity. So free cash flow for year 2 is 85.28. इन दोनों का present value करेंगे तो 118.84. So first answer 118.84. Net present value of high growth. Next, current market price 240. Calculate the implied sustainable growth rate for terminal stage. Current market price 240. Number of shares they have given in the question 60 lakh. So equity value is 14,400 crores. So 14,400 crores is the present value. So 14,400 crores is equals to present value of stage 1 plus stage 2. So present value of stage 1 we have already calculated 118.84. Present value of stage 2 is 14,400 minus 118.84, that is 14 to 81.16 crore. So terminal they have given in the question terminal value stage growth 20%, और हमारा equity capital expenditure is going to be 70% of this 20%. So free cash flow for the equity is going to be 281 crore into 86%, that is 241.875 crore. So हम लोग terminal value calculate करेंगे इससे, and we are going to substitute in the formula like 14,400 is equals to 118.84 plus terminal value का present value. So we are going to get growth rate of 10.5%. Next B, 5B, earning at risk is 8%. Identify the gap position and calculate earning at risk. So पहले gap calculate करेंगे. Here net liabilities is more than net assets, so the gap is going to be negative. So the gap is minus 3,300 crores. So हमारा liability ज़्यादा है और assets कम है. इसका मतलब interest expenditure अगर बढ़ेगा तो हमारा income घट जाएगा. Income will fall. If income in interest rate falls, then our income will increase because we are on net liability position. Next, second point पे they are asking earning at risk. So अगर repo rate 50 bps बढ़ा, earning at risk कितना होगा? So we are at net liability position and repo rate is increased by 0.5%. So our earning at risk will be 16.5 crores. So इसको percentage में convert करेंगे 3.61%, which is lower than the earning at risk limit of 8%. So this is acceptable. So we don't need to hedge. Same for scenario B will calculate, and this is also acceptable. We don't need to hedge. Briefly justify why transaction exposure is more critical than translation exposure. Transaction exposure when we are directly affected to cash flows, and translation affected only conversion and no cash flows. Next to 6A Agrotech, a listed company, we matrix का question दिया हुआ है. So they are asking annual post merger synergies PAT and PE basis पे standalone जो होगा. So post merger PAT 6850 they have given in the question, or PE भी दिए. So say we are going to calculate the post merger value of the firm. PE into EPS, yeah, PAT into P into EPS we are going to get MPS. PAT into PE we are going to get market value. So हमको market value आ गया इधर. Next standalone value is 6,000 rupees PAT दिए और उसका PE ratio 30 है. So value of A standalone कितना होगा? And they have given the synergy gain here is 34,000 crores. So combined value is equals to value of A plus value of B plus synergy gains. So combined value is equals to value of A plus value of B plus synergy gains. इसमें if we substitute, we are going to get the value of B. Next, PAT without synergies होगा. PAT of A plus PAT of B is 64850 and actual जो PAT है 6850. So difference is going to be a synergy gain. Next, second question. Calculate the average industry PE and mid-gen standalone fair value per share. So PE calculate करना है और net alone standalone fair value per share. जो merger value है उसका if we divide it by that we are going to get PE of the merger value. So it's given in the question that PE is equals to 1.2 times of industry average PE. So PE हमारा 42 है. 42 is equals to 1.2 times of industry average. So industry average is 35. So next industry average calculation हो गया. So they are asking standalone fair value per share. Fair value per share standalone होगा 18,900 divided by 5 lakh shares. So 3780. Next, solve the number of shares offered in offer 2. So offer 2 में they are giving a premium of 21.69%. So price will be 4,600. 1000 plus number of shares we'll take it as X. into market price is 360. So for which we are going to get 4,600. So number of shares given is going to be 10. Next, fourth point, rank all these offers. So rank करना है. So cash offer for one is 4,000. For offer two is 1,000 plus. We have calculated 10 shares. So 4,300. Offer three is conversion value of debenture is 6,600, whereas redemption value is 680.24. So as the redemption value is higher, we'll choose the redemption value. Or this calculation we are going to get 3401 plus 1150, which is given here in the question. 1150 plus 5 convertible bonds. So we are going to choose best offer. We are going to rank it. Thank you.